Cool. Alrighty. Welcome everyone. Thanks for showing up here today to talk about NFT investing with Nick here. So just a bit about us. We're from Collective Shift. So we are a crypto research firm. So we publish market commentary, research reports on different trends going on in crypto and the NFT space. I've been working full time in crypto for 5 years now. And Nick, who is behind me, is a senior analyst as well at Collective Shift. And we're here today to talk about just a 101 on like what is NFT investing, and to kind of give you all some heads up on some different things we've spotted from our Collective Shift community over this year in particular, when it's come to some mistakes we've seen, some common questions we get. So yeah, looking forward to getting into it.
So we'll go into the basics of NFT investing, go into key considerations for new NFT investors, why there's more to NFTs than just investing, and we'll open it up to a Q&A if there's anything that you guys want to ask us, figure out your questions, and we'll come to them at the end.
So as we've seen, many of you will be familiar with, mainstream NFTs hit the headlines all throughout last year, built up this momentum of just social momentum, social proof, and to be honest, just like a lot of speculation. If you go to the next one there, Darren, it's essentially the market we're in at the moment. Not going to bullshit anyone. It's pretty much just driven by speculation at the moment. That's not a bad thing. That's just a part of any new market, whether it's emerging tech stocks or NFTs. So I think you've seen some great talks today about what NFTs could become. They're definitely in the works, but to be honest, where we're at the moment, there's a lot of hype and a lot of speculation. So just really going to clear things up on where we are at the moment.
So just looking at the graph here, we can see 2020 in Jan, nobody was really paying any attention to NFTs in the market. There was such a small percentage of the overall market, and we can see the huge spike in volumes and attention the NFT market has seen. And we can see in the bear market an absolute die-off of NFT volume, transactions, and users in the marketplace at the moment. At the moment, it's about 5 to 10 billion of total value of market capitalization. If we compare that to the total crypto market cap of 800 billion, we can see that NFTs are still less than 1% of the total cryptocurrency market cap. But we're seeing a lot of Web2 agencies, a lot of big businesses start to use NFTs as a really useful tool to harness and garner customer attention.
Yeah, so just quickly recapping what is an NFT. There's been some great presentations here today. I think Josh in particular kicking off in the vault. But yeah, we should all kind of have a good sense by now what an NFT is. Basically, I like to use the analogy of just basically it's a file format. I like to really draw similarities to MP3, sort of, what is an MP3? Well, it can be a song, it can be a lecture recording, it can be a podcast, so many different things, and that's basically what we got with NFTs at the moment. So a lot of the time in our community, people will come in saying, hey, I want to invest in NFTs. And it's you just got to kind of put the brakes on at that moment, because it's like someone coming up to you and being like, hey, I want to invest in stocks, or I want to invest in crypto. You got to kind of take a step back and just be like, all right, let's just go over what this asset class actually is. As you can see on the screen there is about a dozen, even more categories, and over the coming months and years, there will be dozens more that we probably can't even imagine at the moment. But that's the first thing that I think a lot of just newcomers don't even really realize. They see the JPEGs in the headlines, Bored Apes, CryptoPunks, but again, it's a technology, it's an NFT, it's a file format, you can use it for dozens of things.
So we can have a look at some of the categories here. Put up your hands if you've ever heard of the Starbucks announcement that they'll be utilizing NFTs. So that's a really unique use case for NFTs, where it's not necessarily built on any rarity or trying to buy the NFT because it may hold any value, but it's a case of big businesses like Starbucks using NFTs as a loyalty program. So we can imagine one day that you might buy 100 coffees from Starbucks, and who knows, they may do something really innovative where you might be able to mint a Starbucks avatar. That's yet to be developed, and we'll continue to see what Starbucks is going to bring to the market, but we can see that there's other use cases such as domain names. If anybody has a .eth name or a .sol name, those are represented as NFTs. If you have a very common name like I do, nick.eth, that's a very exclusive domain name where the holder of that is able to really get a lot of speculation value because it's very unique. We can see for ticketing and we can see for art is one of the biggest use cases. We've got avatars, Reddit. If anyone's familiar with the Reddit avatar program, they actually didn't use the word NFTs in their deployment of their avatars. But it's a unique aspect where a lot of these big agencies and big businesses are using NFTs to really connect with their customers. Avatars is another big one. So is Metaverse Land, which is represented as an NFT format, and gaming. So your little characters, your avatars, your in-game items, these are all represented in NFTs.
So we get a lot of questions like, okay, if I'm wanting to invest in NFTs, yeah, cool, I get that there's categories, but what do I look for? And again, it's a very hard sort of question to answer because of how many types of NFTs there are, or how many categories that is. But generally, over time, we've seen some core sort of repetitive sort of factors that have emerged in probably the more successful, I suppose, investments, if you were to call them that. So the number one for me for any NFT, that if I'm looking to get a financial return, I always go to just into the community. So whether it's Discord, which is most common, you want to actually see if there's some organic conversation going on about the possibilities of the projects, what the founders are up to. It's very easy to spot just basically people gamifying the chat. So that just means spamming it, just writing little hello, how's your day going? You'll see a lot of that for people just trying to gamify it and get on the allow list, for example. That's why it's not, at a high level view, yes, you may assess some community metrics or whatnot, but you kind of have to get into the Discord. Yes, it takes more time, but it's super necessary, I think. Also, utility, again, if it's that sort of NFT, probably one that isn't really art, but one that perhaps is an avatar collection or, a profile picture. You kind of want to see, okay, what is this project wanting to do? And does that even make sense to be deployed on a blockchain? Is this just a cash grab or not? You can kind of discern that by just spending a bit of time just asking the founders what their vision is and how they're aiming to realize that vision. And finally, professional experience is probably one that ties in with being a docs team. I think generally speaking, that's a good thing, and it allows you to see their professional experience. Do they have runs on the board in other industries that align with this sort of NFT that they're preparing to build? So there's some pretty good examples there, like VeeFriends, obviously Gary Vaynerchuk and VaynerMedia have runs on the board to kind of market and to just build a brand. So that's very complimentary there. And then Proof, you've got Kevin Rose. You would have seen Greg interviewing Kevin maybe if you were there this morning. Again, runs on the board, has had a lot of experience in the venture capital side of things, has a deep network, and can get shit done essentially. Cyberbrokers, Josie Bellini, has been one of the first sort of artists in the space and has very good connections in terms of her developer network. And again, they kind of one of the pioneers of sort of putting that artwork on chain, and then you can trust them that they're going to then sort of deliver value and be around for the long term. And last one here, Rug Radio. So Farouk, I think, is being interviewed here virtually tomorrow. But they've probably got Rug Radio DAO is probably one of the more comprehensive, impressive DAOs that I've seen in terms of how much time they spent on compliance and structure. They got the likes of Keith Grossman from Time Magazine. So again, you're looking for complementary professional experiences with what the NFT is trying to do.
So we talked about a lot of the good and what to look for. Arguably the most important are the common red flags and understanding what to look out for to protect yourself in the space. Because NFTs, one of the greatest things is that they can be permissionless, anybody can create them, and now we have free tools where you don't even have to be a coder to be able to deploy and create an NFT or a community project. This just means that it's a huge rise in the amount of people creating these projects, for that monetary incentive. So it's really important to look out for these red flags. One of the top red flags you look out for here is botted social media followers. You might have seen that project that's doing the rounds on Twitter. You may look at the number of followers they have. They may have 200,000 followers. I've seen countless projects buy paid Twitter accounts. They've saw them bot and create discords that don't actually have that community engagement to try and fake that social proof that people are interested in this. An overly focus on price, that's always a key giveaway whenever you're looking at founders, whenever you're looking at project leads, whenever price is the number one thing they're looking for, this can often be a red flag. We've got an anonymous team here. This one can be a bit controversial because we know that Satoshi is, he's not a doxed person, or they. So not to say that anonymous is necessarily bad, but it just means that it's easier for teams to exit scam, rug pull, or exit the market if they are not doxed and have a really solid social foundation. We can see vague, generic language, many buzzwords. Over my time looking at different projects, I've seen a lot of different cryptocurrencies that have about us pages that basically just plaster buzzwords all over. We're in the metaverse, we're in the NFT space, we're in social gaming, we're doing this and that. If you see an overly focus on these buzzwords without really explaining what they do and why they're important and what's different about them, that can also be another red flag to watch out for if you're holding that project. Another one here is lack of experience. Another big one I've seen, especially last year, when we're seeing a lot of teams try and raise a lot of money and a lot of NFT projects that are raising substantial amount of capital, and they'll say that they're going to come out and build a metaverse, they're going to build a game, they're going to build this and that. But if you look into their social and the team about them, they may not have any game experience. They might not have the software development tools to actually make this happen. So this is something I'll look out for. If 1 or 5 of these stand out to you, maybe that's just a thing to rethink the project you're looking at, because unfortunately, there are a lot of nefarious projects out there. We've seen, has anybody noticed this image on my left? That's Pixelmon. That raised about $75 million, I think, at the height of the bull market. And it turns out there were just a bunch of people getting people to do drawings for them on Fiverr. I don't think they've delivered anything yet, but a lot of people bought into that. They bought a lot of the social media, they faked a lot of engagement, faked a lot of experience, and that's probably a pillar to me when I think about common red flags in the NFT industry.
Cool, so just going through some key considerations overall throughout 2022 that we've kind of wrapped up into 5 that we often communicate with our community, and I would like to share with you today. First one, just understanding your risk tolerability. This kind of goes for all of investing, but particularly crypto because it's so risky, and then again, even for NFTs because it's another level of risk. So again, you'd actually be surprised how many people just haven't actually sat down with themselves and just gone through what are my financial goals, or what am I actually trying to do as a result of putting my money into this asset. They'll often not have an exit plan. So they'll just, for the sake of an example, just invest in ETH at 500, it'll go up to 3,000. They kind of will just keep holding it because they never actually really thought about, whether they should end up selling it. And then they kind of get all down on themselves when it goes back down to about 500. So it's just sitting down with yourself, understanding what your risk tolerance is. Next one, there's tax implications. This is a surprisingly massive topic that I don't really see many people talk about. Yes, it's tax. It's generally pretty boring conversation, but this has changed a lot of people's lives for, sadly, a lot of times for the worse. I saw it a lot of times when I first started working in the industry with the 2017 and 2018 bubble, and I've seen it again this year where people have realized capital gains events when they've sold something that they've made a lot of, quote unquote money from, but they've sold it into stable coins, or they've sold it into ETH, probably more importantly, and then they've actually lost a lot of that money in ETH, and then they've actually ended up owing fiat money, Australian dollars, on their tax, and it's been pretty sort of unfortunate circumstances. So big one there, I'd say, just for people to just check out with your accountant how does this all work, and would encourage that.
Big one here is wallet management. There's little point investing if your wallet management isn't up to scratch. This is another one we've seen a lot in our community about people not understanding sound wallet management in the space. So a key one here is storing valuable NFTs in a separate hardware or cold wallet. We've seen time and time again, we've seen people get scammed, accept things or click signing of their wallet without realizing that they're actually maybe jeopardizing their other NFTs that's associated with that wallet. So just separating your valuable NFTs from your daily NFTs, keeping clear separation of those wallets, and buying a hardware wallet and storing it securely offline. Getting into online security, as I stated, scams, unfortunately, is extremely prevalent in the space. We do have a security center on the Collective Shift website. On our Discord, we have security channels where people can go and ask questions and come together and learn about security in the space. So yeah, another big thing here is making sure of phishing scams and understanding how to identify these scams when you may be faced with them, because they're no doubt going to come for a lot of people in the space. Another key one here that people may not be aware of is knowing who you're trading against. NFTs are really synonymous with a lot of people who may be flipping NFTs for profit, but there's a lot of surveys out there and a lot of on-chain analysis that is showing that a lot of the top NFT traders are capturing a majority of the secondary and first profits on marketplaces such as OpenSea. I think there was something like 400 traders made about $1 million in profit. And these people really are making use of the software analytics tools such as Nansen, NFT Nerds, NFT Go, even Dune Analytics. If we go this side, this is not a promotion for Nansen at all, just that you can see a lot of people who do have access to information that others just simply do not have are able to see which are the hot contracts that are being minted. Who is the quote-unquote smart money that's holding different NFTs? What are they doing? If they're transferring a token or doing a mint, a lot of people often just follow them and check out what they're doing because they've made money before. So it's being understanding of who you're trading against, the tools that they're using, and you can use these tools for your own advantage to try and work out on-chain, what's going on in the market.
All right, then another big point about just how people sort of portray or see the NFT space is it's through the lens of making money, but really important to just bring up that there's just so many more applications or uses of NFTs that are not really related to making sick gains. Not everyone, I really want to stress, not everyone buys them for their potential return on investment. There's so many sort of other ways through which you can gain that isn't financial, but can actually improve your quality of life or other benefits. So, community is probably the biggest one for me this year that I've sort of realized through NFTs. Having access to this community, you can make new friends, new IRL events you can go to and make connections, or even just networking and helping yourself professionally as well. Another big one is brand affiliation. So another, as Nick said earlier, Starbucks. But name any sort of loyalty program that's coming out. If you're really aligned values with that brand and you want to support them, then hey, that's a really good use case of NFTs that doesn't really relate to ROI. Sentimental is another one. So if you're buying an NFT art, such as on here in the vault, it's again something you get really enjoyment out of. And then sentimental, you could also have things like a ticket to, a grand final or something that in 20 years you can look back on and be like, hey, I really enjoyed that time, and it's a memory for you, rather than viewing it as buying it because you want to flip it, which doesn't really make much sense. But again, it's something that a lot of people sort of really struggle to conceptualize, that distinction between investing in something for ROI versus just buying an NFT.
So there's a lot of unanswered questions in our minds about the NFT space. One I wanted to hit on here is, are NFTs ICO 2.0? I'm sure, were you maybe we show of hands of who was around in the 2018 sort of space when we saw the 2017 ICO craze that hit the market. For those that weren't aware of that, it was this influx of projects that were able to crowdsource their own blockchains, their own projects, their own platforms. This time around, we've sort of seen a similar thing with NFTs. We didn't see a lot of ICOs come out around this year in the last couple of years, but we have seen a massive influx of NFT projects hit the market. In my mind, the similarities to this ICO boom are pretty relevant. So in my mind, I'm really looking out for how many of these NFT projects have the legs, the roadmap, the actual utility to continue to deliver value. Because at the height of the bull market, I was seeing hundreds of thousands of NFTs hitting the market each day. There was probably 10 mints a day, more in excess. So yeah, that's the one thing to look out for. And I know Matt here has a very strong opinion on the sustainable drivers of value.
Yeah, so I think many people would agree today. There's still unanswered questions about, how does an NFT kind of get more like investment returns or a greater sort of floor price without, with the troubles of sort of expanding their supply. That's been something that I'm really looking forward to in 2023 to see how projects go about doing it. So again, something that's sustainable, a sustainable driver of supply. Meaning not diluting your supply so much that you actually sort of decay that economic value, and it kind of feeds back on itself where it kind of can wreck your project or wreck your sort of broader collection. So that's a big thing that I'm just kind of looking for in 2023. And similarly, who captures the economic value? I think there's still an unanswered question in my opinion of, there's a lot of companies getting involved in brands, which is terrific. I think uses of NFTs will even grow even stronger next year. But again, is it the company that's sort of capturing a lot of that value? If so, you could debate that a lot of the shareholders of that private or public company are the ones benefiting the most. So it's just some things that I'm kind of have been thinking about as we've seen sort of the bear market hit, and it's almost stressed. It's almost been a good forcing function for a lot of projects to kind of sit down and think about what their actual goals are.
Yeah, and to add on to that point, it's no different to what we're seeing in normal cryptocurrencies. One of the most popular ones are Uni. There's a lot of debate about the Uniswap Labs, who are a separate entity who are acquiring a lot of funding. A lot of people are investing in Uniswap Labs, but the Uni token is something separate. And it goes to the same with NFTs. There are these NFT projects that have their own tokens and NFTs, but then there's the underlying team behind them who may be, a registered entity who are also acquiring value. So it's up to the market as well, and maybe with more regulatory clarity, we may see exactly where the value lies. Regulation is another one that I'm closely following, just simply because it's a nightmare to launch a token at the moment in the US. And that's why we're seeing potentially a lot of these NFT projects that may have launched a token, such as
Bored Apes.
Bored Apes is the main one, with Apes, who launched their token, but we may see the real repercussions to that in the next year. And finally, will your NFT last forever? This is one that's really important, because if you buy an NFT now and it's not stored properly on-chain, you may not be able to access it in 5 years. A lot of people have the misconception that NFTs will last forever. They will only last as well and as the best practices as it's stored. So if you guys have any other questions, happy to get to that.
Yeah, that's it. If you think of some questions, just want to kind of shout out that, you can get these slides on the Collective Shift platform. We do have a 7-day trial for $1. Once the 7 days hits, you guys can cancel it. I won't be offended. And then we also have Twitter as well, just at @cshift_io, and we've got podcast, YouTube channel, newsletter. Just again, trying to keep everyone up to date on the crypto market as well as the whole NFT ecosystem. So was there any questions by anyone about what we said that was relevant to NFT investing? Yeah.
What's been your best and worst trades the last year or so?
The best, Oh, probably. It's hard to say because it was like Moonbirds was really good for a minute there, but again, I ended up like holding it because I really enjoy being a part of it. But yeah, that's round trip's pretty bad as it's kind of tanked. I'm not too much of a flipper like myself, but there were sums that were only pretty small ETH gains, but yeah, definitely had some big losses as well. Probably Lil Nouns. It was one that's like down pretty bad. But again, you know, I kind of go into it. I think part of my job is to kind of like understand a lot of these things. I do have investments that I do I'm like bullish on and I'm like continuing to hold. But then I do have a lot of NFTs that don't really have much value, but they were more for just like trying to figure out like, are these things actually necessary, et cetera, et cetera.
How do projects get like on your radar? Do you seek them out or do people seek you out?
To the end question there, like I'm always cautious of projects that seek you out because they obviously want to access a platform. So normally if somebody reaches out to me saying, I've got this new project, can you feature? That can be a bit of a red flag as well. If it's not somebody that you may know or have a good reputation with. So a lot of it stems from a handful of ways. Initially, it was a lot of like looking at the academics, like what are they doing, especially in the cryptocurrency scene. But when you're looking at NFT specific, it's a lot of those industry connections. Who's building in Web 2 that may have really great talents are starting to dip their toes in Web 3. Because as we know, that's just such a useful monetization tool to connect your community. So I think that's a really big check there. If they're really successful in Web 2, may have an audience, have a really good following, and they're dipping their toes in the Web 3 space, that's also like a really good sign for me.
Yeah, I feel like discovering projects, probably for like the very earliest stage, I would say for me like hackathons have been really good. So like mostly Ethereum hackathons, but yeah, even Solana ones sometimes as well. And then just using software that just tracks like some Twitter sort of like figureheads, people in the industry that you kind of trust. Just over the years, you kind of build up a trust in their sort of taste or their I suppose their eye for talent. Using software to track like who they're following is like another really good one that I've found beneficial. And then tools like Nansen as well, where you can see, that's probably more for like trading NFTs, which I don't really have ever really had the time to do, but that's a big one. It's like you can kind of get metrics on, where are the influential money, where are they putting, if there's this new mint going on, it kind of will detect how many of that smart money category are kind of participating in that mint. And that's how a lot of people sort of are able to like pass that signal from the noise.
Thank you very much, boys.